Good morning. All I could have said it better myself.
Sure. Well, that's good. You only got time for questions then.
Well, good morning, everybody.
Good morning.
So I wanted to touch a little bit on what CTR had mentioned about the award. So that's something I'm very, very proud of. It is a non-biased tally. They literally go out to each one of our clients. They do a survey, and we're graded from the client on how we did. You know, basically on the process of the loan, the transaction, closing on time, how we communicated with the clients. And I have gotten that award every year for the past 10 years. So pretty cool. I'm proud of that fact. And there is only 32 of us out there. The really neat thing is that we all know each other. The lending world is a very small world. It seems large, but a lot of the loan officers that have been doing it, or loan consultants that have been doing it for a long time, we all know each other. So there's some camaraderie there. But what I wanted to really discuss today, there's so much online nowadays, right? I know you can go online, you can go to a website and pop in, hey, what's today's interest rate? There's going to be, 55 different sites that pop up. I think it's great that we have the technology that we have today. Don't get me wrong, technology is very important, especially in my industry. But it's also still about, and it needs to be about, the relationship with the client. So what I wanted to kind of walk you through was what we do, or what I do for each one of my clients. I still, to this day, take their application. Now, we have an online process that someone can go in and do that application, but typically, I am still walking them through that application. And the reason for that is an application for us is where we build our relationship. It's extremely important to know everything about this client. And in the lending industry, guys, I'm going to know, if you're coming to me for a loan, I'm going to know everything about you. I'm going to know the good, the bad, and the ugly. Right? Because at the end of the day, you're sharing absolutely everything with me. You're sharing your financials, you're sharing your credit, you're telling me about your history, you're telling me about your goals. So I've put in front of you here just a little sheet that this is basically kind of what we do to get to know a client better. Now these items are online as well, right? But the very first thing we're asking is, how is the best way to reach out to you? What's the best way to communicate? Some people like email, some people like text, some people like giving a phone call. I will let you know, out of probably 95% of the people that we do online or on the phone calls with, I still end up meeting with probably 80% of those 95 people in person, somewhere in the process. It's amazing how everyone talks about, again, technology being a great thing, but there's still a personal handshake, right? Even when folks go to sign their escrow documents, there's no escrow loan closing documents that are electronic. The final documentation, you're sitting down in front of a notary, you're sitting with a person, a human being, to go over this documentation. I think that's still very important. So we'll ask how to communicate. Are you a first-time home buyer? Have you purchased a home before? What are your reasons for looking at buying a home or refinancing a home? What is your biggest concern entering this process? That is my key question right there. I want to know right off the bat what these people are concerned about with the loan process, because there's a lot of folks out there that have had a bad experience, right? So communication is key, and that's a key question for us. And then what are you looking for in your loan advisor? What is it that you want to see from me? As your loan consultant, what can I do to help you through this process? What is going to be a benefit to you, right? So these are very open-ended conversations or questions that we're having, but that gets a client communicating. So they're not just sitting there typing away on the computer, putting in their social, putting in their date of birth with someone that they don't know personally. Okay? What are you looking for in your loan advisor? How did you hear about us? We always want to go back and take a look and see who was referring the business to us. And then I also include my team, right, from my BGI. So I will include find out if they have a financial advisor, find out if they have a CPA that they're working with, find out who they're using for homeowners insurance. I look at myself and people within our group as a branch to my team, because obviously we want to be able to refer back, but that process, I find out about their financials. They have to have homeowners insurance. Are they working with a real estate agent yet if they're looking at purchasing a home? This way we can keep it within the community, keep it within the family, okay? So how the process works: every phone call, every email, every online application that comes in, whether it's from myself or from my team, or someone doing it online and we're pulling in that information, I have the first and foremost communication with every client. I get them on the phone. If they filled out their online application, I get them on the phone and we go through the entire process. Once again, I go through the entire application, and that again is to build rapport. It's to find out what we can do to help this client. So after that application is taken, and I am the first person that contacts these folks, so they know right off the bat that I am their primary source of communication when it comes to do with anything having to do with the structure of the loan, the interest rate, their closing costs, whatever it may be, right? So once that portion is done, then it goes to my team, and it goes into what we call a transaction coordinator or a loan assistant. Their entire job is to make sure that they're explaining correctly and helping people collect documentation, the W-2s, the pay stubs, the tax returns, the assets, whatever it is that we need to make sure that these people are 100% qualified. So after my initial conversation, there's an email that's sent out to every client, introducing them to the team, introducing them to each person on the team and what their goal and what their role is for that customer, okay? We make it very clear that we want to have documentation within about a 48-hour period, and the reason for that is because especially if we're making an offer on a home and this is a purchase, we want to be able to have that pre-approval letter so they can make that offer as soon as possible. So we let them know within a 48-hour period we can have them 100% approved for the loan, and also then we can go ahead and lock in an interest rate. Really important, and it's kind of a key factor for these folks, and it's kind of a way to get them to send the documentation into us fairly quickly, because now we're saying, hey, we have to have this to lock in your rate, which is going to affect your payment, right? So once that is done and we've collected that documentation, Faith, who is part of my team, who's my primary, who does the loan assistant and the transaction coordinator, will go through all the documentation. Once that is cleared, it goes to processing, okay? A processor's job is to make sure all the T's are marked and make sure all the I's are dotted. Because in my industry, if you miss one little box, it can make a difference of someone getting a home or not getting a home, or getting their refinance or not getting the refinance, paying off their debt or not paying off their debt. So it's extremely important to make sure that that package is done very well, and we can put a red bow on it and then send it to the underwriter. So once it's in processing, our processing is typically only about 24 hours from when we get the documentation from the client into the processor. The processor does their jobs, 24 to 48 hours, and then it goes to our underwriter. And that's the final step, right? That's where everyone goes, well, am I underwritten, am I approved? Our underwriting turn times right now when we go to our underwriters directly are 48 hours, 48 to 72 hours, mostly 48 hours. So within 48 hours, we have a conditional approval for a client. That conditional approval is sent to the customer, and then we go over the conditions with them. So it's not unusual in this world that we live in now, with everyone working together to make sure as a team that we can get these loans done, that we close in about a 15 to 20 day period. Okay? So the reason I'm explaining all this seems minute, probably a little boring, but this is communication with the client. This is keeping them up to speed on what's happening with their loan and making sure that we can close the loan very quickly and close on time. I think that's one of the primary reasons that we receive the 5-star mortgage award every year, because of the communication that we have with our customers. Okay? So you have in front of you, one of the things I did want to go over with, we have talking about products now. So we are in a refinance market like you would not believe. Interest rates have dropped dramatically. In fact, we are almost 1.25 points lower this year than where we were last year. That's huge, right? So one of the things we're looking at is refinances. I put the sheet in front of you because we have a refinance boom going on right now. Refinances can be for a lot of things. We can do a rate and term to just reduce an interest rate, hopefully not add additional principal to the loan that you already have. We have a lot of folks that are calling right now for debt consolidation loans. Now, I am a believer in some debt being paid through your mortgage, but not necessarily all of it. So what we do in this case, if someone calls me and says, John, we just need to get out of credit card debt, or we need to pay off these items, we're going to look at the annual percentage rate if it's a credit card. We're going to look at the APR if it's a car payment. And what I want to see is if we lock this into their mortgage, how long does it take them to regain those funds, right? Because we're paying off a debt and we're reducing their monthly payments, but now you're amortizing that debt over 30 years, okay? Reason I mention this, because again, it's going back to the relationship with the customer. We're not just a company where you're going to call and get an interest rate over the phone and lock in your loan, and then you're never going to have conversation again, okay? Investment opportunities. So right now, there's a lot of folks that are pulling equity out of their properties. We're in an equity-rich market right now. I like to call it the Twitter-patient months of our industry. People are buying homes right now. We're building equity. A national average, and Mike can call me on this if you'd like, a national average that we're seeing an appreciation, and this is national, this just isn't in California, but nationally it's about 4.5% each year is what we're seeing appreciation on properties. So if you have someone that's had a loan or a home for the last 20 years and they're building that appreciation and they did not do any type of refinancing, these folks are now pulling that cash out to do more investments. So we're doing a cash out refinance for them, hopefully still reducing their payment or keeping it close to where they are based on where rates are today, and then allowing them to take that cash to make a purchase on an investment property, and then looking at positive cash flow for them as well. We have a lot of folks that are doing equity lines right now, right? So we can redo their first loan and then do a piggyback second is what we call it. You can actually go in this market up to 95% loan to value, which is unheard of 2 to 3 years ago. So you can have an 80% first and a 95% second, which carries no mortgage insurance, very important. So these folks can use that to either purchase a new property, renovate their home, or use those equity lines to possibly pay off debt. Now here's the thing about home equity lines. This is very important to know. Home equity lines are never fixed. If someone tells you that it's a fixed second, then it's a fixed second. It's not a home equity line. Home equity lines are based on prime. Prime can adjust. And most people at 95% are not going to be at prime. They're going to be prime plus because you're going to 95% value of your home. Okay? So if this is a short-term equity line that you're going to use, it might be a good option. What I would never recommend is using your home equity line for business purposes. And I'm looking right at the camera for that one. I've had too many people that will use their equity lines. Do not mix, in my opinion, do not mix personal with business. If you're using that equity line, make sure that it's being used for something that's going to affect the home in a positive way. Do not use it for your business. I don't know if everyone remembers 2007, 2008, right? Yeah, absolutely. So at that time, folks were in a bad way for the most part. We lost a ton of equity. People couldn't afford their homes. What the larger federal institutions had to do, unfortunately, is they would freeze the home equity lines. So we would get calls from people going, hey, I had a $200,000 line and I had $180,000 available on it, and now they're telling me I can't use it at all. And the majority of those folks were using it to substitute on their business. So do not recommend that. But equity lines are a great way right now to do home renovations, possibly pay off debt, but I would always look at it as a short term. Our ultimate goal is to get rid of that home equity line as quickly as possible, pay down that principal on an accumulated basis so you can remove that home equity line and get back to a first position. Self-employed solutions. So we are in a world now that the self-employed loan, no doc, stated income type of loan has come back. Okay, this is not going to be 100% financing. 720 FICO score, no questions asked. That's the reason that we had the issues that we had back in 2007 and 2008 because of those pay option arm type of products. So we do have stated income, or what we call a no documentation loan, that has come back. This is both on the refinance side and it's also on the purchase side. We are able to do what we call an income calculation based on a self-employed person's bank statements. We do it on a 12-month or a 24-month period. We use those deposits to basically build income for them, and that is all that's used. Now, you can't have derogatories on your credit. You have to have a certain FICO score. But this is a really good way for people that are self-employed, that do have the write-offs. They can't necessarily qualify based on W-2s or tax returns or schedules or K-1s or whatever it may be to still be able to get into a home. So the average rate right now, guys, on a conventional conforming loan up to $430,000 is at about 3.75 today. That's huge. Up to $726,500, you're looking at around 4 to 4.125%, to where we were a year and a half ago when you were in the 5s. Okay, so I don't think there's any bad time to purchase property in California. I like to take that from Mr. Mark Holmes. When's a good time to buy a property in California? Well, yesterday. And I'm a firm believer in that. But the lending industry has opened its doors quite a bit to different products. What's really important for me after having communication and building that relationship with the customer is knowing that being the position I am with the correspondent lending that I do, we have 52 different investors that we can go to put somebody into a loan. Now when I say go to, these are servicers of loans. We're still the mortgage company, but think about that. I have 52 different boxes that I can fit somebody into. When you're looking at your federal institutions and nothing against them, you have one box. If you don't fit that box, that's when they're calling me. Okay? So I'll open it up to questions at this point if anyone has any questions. Any? Yes, sir.
So, as a consumer, I totally appreciate your professionalism and everything you do and your knowledge and your background and history and how you handle this. But my question is the company you're associated with, since there's been a few over the years we've known you, is that important?
Yeah. Is it important as far as the company?
Because it seems like we want to buy you. We don't want to buy the company.
Absolutely. I think you know, anyone that's in my industry, obviously you have to have a company behind you to support you. Whether you're brokering, whether you're a correspondent lender like myself, you still have a relationship with your investors. But you're absolutely right. If I were to leave my company tomorrow, is it about the company or is it about me? I think it's always going to be about the loan consultant. Is who it's going to be about. The position I am with LendUS and RPM, though, for myself, the reason that we made that move was to make sure that we had additional doors that we could open for our customers, which is extremely important.
Okay.
Yeah.
Thank you.
Right. Yes, sir.
So the kids, you know, today, if you're going to live in Newport Beach or Costa Mesa, I mean, they have to pay $1.5 million for a home. I mean, you know, it's over $1 million.
Yeah.
And so what kind of, you know, and if you put 400,000 down, you have $1.1 million loan. What's it take? What's that monthly payment? Like $6,000 a month, $6,500 a month?
Hold on, let me dial that in the mic.
Yeah.
Well, you know, I think it all depends.
What's the multiplier?
It's Mike Rain's fault. It's all Mike Rain's fault.
What's the calculation for gross revenue they would have to have, or gross income they'd have to qualify?
It all depends. Is that a good answer to your question? Literally, everyone is a different, every client is a different thumbprint. And I usually have that conversation right off the bat, right? So if we have someone that calls and says, hey, what's my payment, what's my rate, what's this gonna look like? We'll have that conversation, but what you gotta take into consideration is people, unfortunately, are not numbers, but a loan is. A loan is a debt to income ratio. And a debt to income ratio, it will depend on whether you can actually purchase the property or not purchase the property. If you go above a certain level on a ratio, right? So there's gonna be credit factors, there's gonna be income factors. We have to look and see what kind of debt they're paying out on a monthly basis. I can have someone that makes $500,000 a year, and then we get a copy of their credit report, and they've got, you know, $45,000 a month going out in monthly debt. I've seen it.
Yeah, sure.
So that's where building that foundation from the very beginning is how we're gonna let them know what they can afford and give them an idea of what they can buy, okay? So you can purchase with as little as 5% down up to a loan amount of $726,500. What is that gonna look on paper though? They're gonna have mortgage insurance. Taxes and insurance have to be impounded. Can this young millennial afford to do this? Do we have mom and dad that are gonna be co-borrowers to help them qualify or possibly help with the payment? Everybody is a different thumbprint.
So what's the payment gonna be?
Payment will be $6,485.67. Amortized over 30 years at 4.5% interest rate.
But yours might be different.
But yours might be different. Absolutely. Yes, sir.
Going from a 30-year fixed to a 15-year fixed
Correct.
is, can you pretty much assume that your mortgage payment will double? Will it? What type of numbers trickery is done to trickery?
Let me put on my magic hat.
Yeah,
Trickery. Sorcery.
Yeah.
Sure.
So
will
does
it
just
double?
or-
It doesn't necessarily double. No, it doesn't. I mean, the whole point of doing a 15 years is to pay off in 15, right? So the beauty of technology today is we can set up mortgage calculators for any client. Even if they have a 30-year loan, if they say, John, we want to pay it off in 10, or our goal is to be debt-free in 15, whatever it may be, instead of necessarily doing a 15-year fix, where absolutely your payment is going to go up. May not double, but it's going to go up. Maybe we look at an amortization schedule where you apply additional principal each month. Our loans don't have prepayment penalties on them, guys. That's really important. So that means that any given time you can pay off your loan, or you can put more principal down to pay down that loan quicker. So it may be that you apply an additional $500 a month and you pay it off in 10 years. We can literally dial it in to the dollar amount and show you what that would look like. So I have those conversations a lot where folks are going, yeah, I want to pay it off in 15 years. Holy cow, is that my new payment? Right? Interest rates are always going to be lower on a 15-year fix, but you're right. It's going to make that payment much higher. So does it make sense financially for them to be able to say, maybe this month I apply an extra 500, or maybe next month I apply an extra 1,000, or do I stick myself for the next 15 years with this monthly payment? That's where it comes in, really knowing the customer, knowing their financial background. How do they manage their money?
Yeah, exactly. It comes down to the relationship and knowing.
Absolutely,
Knowing
absolutely.
your client.
Real quick, I'd say you have a pen in front of you. So I wanted to just point this out. This is a pen that I'm giving out to everyone. This is the SoCal Hero Homes Foundation. This is very near and dear to my heart. I created this foundation. What this is for our heroes, whether they're here or overseas, people that are risking their lives every day, whether it's in the military. This is set up for veterans, for active military, for fire, and also for police. This is a nonprofit. I put a lot of money into it. We don't take any profit out of it, right? So every month we actually give back to a hero in need. And this program also gives discounts to those heroes. We started a $900 discount on the loan side, and then our real estate realtors, real estate agents that are part of this program also can give discounts as well. So this is a way, it's very important for me, this is a way for giving back. So if you wouldn't mind, take a look at SoCalHeroHomes.com or go to SoCal Heroes Foundation, OCHeroFoundation.org.